We're going to start today with a conversation with Nitin Rai, Managing Director of Elevate Capital. Nitin has been a very active angel investor and seed investor in the industry. Nitin, welcome to the program.
Thank you.
So tell us about your seed stage investment activities. Let's get to know you and get you introduced into our community.
Sure. My background is I started out as an entrepreneur back in the 80s in Silicon Valley and moved to Oregon in the late 80s, started a company called First Insight, and then got involved with an organization called TIE, the Indus Entrepreneurs, and we launched the Oregon chapter in 2007, and which was right in the middle of the, literally right before the meltdown. And when there is an economic downturn, there's lots and lots of entrepreneurs who are then, creating companies and looking for funding. And I got involved in, through TIE, I was the champion for angel funding. And we have invested in a number of startups in Oregon, several of them women-led, and started getting some really great results. As a matter of fact, our first seed investment was in a company called Zapproved. CEO Monica Enan, she just recently sold her company to Vista Private Equity. Huge returns, probably the best returns we've seen in the last several years.
And what is the company? What does the company do?
The company is called Zapproved, Z-A-P-P-R-O-V-E-D. They're in the legal tech space. They do legal hold. So it's a B2B. Great outcome. And as a matter of fact, Monica is a charter member in TIE. And so we really, in Portland, being a small ecosystem, TIE Angels became a force to reckon with in terms of deploying of early stage capital, taking very early risks. And from that experience and really the work that we did, Elevate Capital was born. I launched Elevate Capital 2 years ago, about 2 years ago, and we have two funds. There's a fund called Elevate Inclusive that exclusively invests in women and minorities and communities of color. It's a public-private fund. It's $2.5 million. We've already made all our investments. We made about 20 investments. Very early stage, highly diverse. It's not a tech. It invests across the board in different industries. The sister fund, which is a larger fund called Elevate Capital, we haven't closed it yet. We've raised about 60% of the $10 million, and we've made 10 investments as well. And these are, again, early stage companies, but, we invest in everybody. It's all inclusive. And we invest between 100 to 500,000, and these are usually pre-A, Series C type investments with room for follow-on.
Okay.
So in total, in the last, I would say, 6 years, I've invested between the fund and personally and along with the TIE ecosystem about 50 startups.
All right, excellent. So we have very deep seed investment expertise here, folks. Let's learn from Nitin what's happening in the Oregon ecosystem and what are the learnings. So before we go there, Nitin, I want to get a couple of points just underscored. So your investment activity is completely in Oregon? Is it exclusively in Oregon, geography-wise?
The geography is really Pacific Northwest with the ability to do some investments outside, and we've actually done 2 investments outside of Oregon and Washington, and that is there's a company in San Francisco called Blendor, and we have also invested in a company in New York called Resi.
Okay. And what is your industry sector sweet spot? What do you like to invest in? What kinds of companies?
So we're actually somewhat agnostic. We started out doing mostly tech, B2B was sort of our sweet spot, but we've since, because of the Inclusive Fund, we've actually done a fair number of consumer internet product. We are in So specifically, we're in what I call tech, and tech includes B2B, some B2C, VR. We're just about to do a cannabis deal, which is mostly on the technology side. We have done some bioscience, some apparel, and most of these industries are actually tech-enabled. So there's very few companies that I would say, other than the bioscience company that we did, I would say we don't have a technology component, whether it's e-commerce or a medical device, but there's some technology component that's involved in these companies.
Got it. So you've invested in a lot of companies in the last 6 years, and I imagine you have a very good deal flow, so you have a unique angle and perspective into what's happening in the industry, especially with the Pacific Northwest and specifically Oregon deal flow. What trends are you seeing in the deals that are coming to you?
So because we had this intentionality of investing in what we call the underserved entrepreneurs, and our definition of that is, you know, women, communities of color, minorities, and also underserved regions. So we don't just invest in Portland, but even areas that are outside of Portland where there's difficulty for these entrepreneurs to get access to early stage capital. And that also includes some of the industries like apparel, sports, food, where you don't see a lot of VC activity. So we've positioned ourselves as a fund that's intentional about investing in those kinds of companies. Now, it's not that we wouldn't look at other types of deals, but what that did is gave us a deal flow, overwhelming deal flow of women entrepreneurs. So 70% of our investments are in women founders.
Okay. But that's,
and that, I would say, is very unique for Elevate, and we get deal flow from all over the country. Unfortunately, given our geographic location, we tend to more invest locally. But that seems to be a very strong underlying current of entrepreneurs that we're seeing. We have women coming out of all over the country that are applying to Elevate for funding.
Okay. And what about industry trends, tech trends, industry trends?
From an industry standpoint, we see a very diverse a group of entrepreneurs that are applying. So obviously it's, you know, between 40 to 60% is technology. And on the technology side, of course, we see SaaS deals. We're seeing VR. The AR, VR activity is really picking up. We see a lot of IoT. We see a fair amount of medical device type companies. We see apparel. We see sports.
So
bioscience.
Let me double click down into we are exclusively focused on IT and IT-enabled services. So I'm going to double click down on your activity in that sector, and I have a few questions based on what you said.
Yeah.
So AR, VR, what are you seeing in AR, VR? What kinds of deals? Are these content deals? Are these equipment deals? What's the...
Some of them have been software deals. So we are, and I can't disclose the details yet because the investment is not closed, but it's actually B2B AR, VR. So it's a platform that helps people build things, you know, directed primarily towards the architects and designers. There is a deal that we couldn't invest in that was more of a platform to build applications on AR, VR. We haven't seen a whole lot of content. There's been some content, but I think a lot of that activity is down in Southern California, not much, or perhaps Northern California, but not much in Oregon.
That is true. That is true. Now, let's talk about a few of your highlights in your portfolio, in your investments so far. And you started off with the legal tech company. I'd love to learn a bit more about it. And by the way, please feel free to introduce the entrepreneur to us, and we'll be delighted to do a story on her journey.
She is just a rock star. Well, happy to make the introduction.
Great. So tell us a little bit about her story. How did she find you, and how did, you know, what stage did you invest in? What did you see in that company at the beginning that gave you the confidence that this was going to go?
Okay, sure. So Monica Enan is a former Intel employee, IBM, went to Cornell, got an MBA, and I think around 2006, she left IBM because she wanted to be an entrepreneur and had an idea. And the idea basically was that this approved idea was really, it was a B2B type play where, at that point, it's a workflow, it was a workflow product. It's a pretty known fact that, we get overwhelmed with emails, and as CEOs and executives, we get a lot of emails for approvals. Approve this, approve that. Well, she created a very simple system where any email for approval would come through her system, and you say approve or not approved. I loved the idea. So I became one of her early customers, and, she launched the product, I think, in sometime in 2008, and was out raising money, a lot of interest from venture capitalists in Silicon Valley, and then the markets took a dip. And so that funding ran out. So she was looking for capital. She called me up and said, hey, I need some angel money, I'm pivoting. And I think during the process, she ran into this opportunity of actually pivoting towards legal, where there was an opportunity to, when companies get sued, they need to hold everything back. Emails, documents, any kind of interaction around that lawsuit, they need to hold back all of the communication. So her system was kind of a natural fit in that problem space, and because it was SaaS, she was the first SaaS company there. So she was pivoting. She wanted to raise some money. I made some introductions into the Thai network. We didn't have an angel program back then, and little I knew, she'd raised $500,000 from Thai, and it got her started to scale. And then over time, she raised about, I think, 1.7 or 1.8 million, and that's all she raised in her entire sort of what I call the pre kind of complete sale of the company. And then she built a great business. She hired a great team. She started getting a lot of corporate clients like Yahoo, and over the years I think she got to about a few million in revenue, and then a big private equity firm came in and bought half of our shares out, plunked a bunch of money in, allowed her to grow even more. And this last year, Vista Private Equity came in and made a big offer and bought everybody out.
Company, all right. And how far did she reach from a revenue point of view?
I think she was, and I'll let her talk about that, but I think she was probably close to 10 million in revenue when this happened.
Turning 1.7 million investment or thereabouts, maybe 2.5 million investment into 10 million annual revenue run rate, that's a very, very well executed story.
Absolutely, and Vista gave a nice markup, and we're all happy, and she is now on to do even bigger and better things, because Vista Private Equity is the largest SaaS private equity firm in the world. They have, I don't know how many billions in management, and so she's a big story in Portland.
Very good, excellent.
Considering the fact that, she had no venture capital. She raised zero VC money, was all angel funding.
I've seen we've done stories on other companies from Oregon that have that dynamic of very capital efficient, mostly angel funded, not much in venture capital, but very tight execution. We did a story on Share ID, which you probably know them. I think they're Eugene-based, not even Portland.
I'm an investor in Share ID. I'm an early investor. Yeah.
All right. So we did that story very early on. They were already quite successful. I think they were already over 5 million in revenue, but with very, very little capital. So we love stories like this, and it's, the truth is, this is how the entrepreneurship ecosystem of the world, not Silicon Valley and not the, hubs that are flooded with capital, but most of the world operates this way. And we've done case study after case study of these capital efficient success stories, and we love these kinds of stories.
Well, I have 20 of those now in my fund.
Great. Well, we should make sure they get their recognition. You know, this is part of the problem with our industry is that the media focuses on funding announcements. So these kinds of companies don't get a lot of coverage. And you know, the saddest story of this is, I mean, it's not a sad story; it's a great story. But you know, 10 years ago, Sridhar Vembu came to see me at my house in Silicon Valley. And he pitched me a company to write about called Zoho. And nobody heard about Zoho, nobody wrote about Zoho, nobody mentioned Zoho. And I was the first to write about Zoho, and today Zoho is approaching $1 billion in revenue and no financing. He has taken zero outside financing.
Yeah.
So tell us more about what your perspective is, and I'm going to very clearly zero in on a trend question, which is I think it's close to your heart. The way I'm observing the way you invest and the way you know, the kinds of companies you like to invest in is kind of emblematic of where we are in the history of technology, right? We are in 2018 February, and a ton of stuff has already been built. You know, there's so much technology that has been built. It's not like, you know, today, if you want to build another Salesforce.com, it's that easy because there is a Salesforce.com and there's all kinds of other things that are big and there are a lot of incumbents and so forth, but there are so many niches, right? Or do you just describe this great story of a legal tech niche? There, you know, Sheer ID is a niche. There's all kinds of niches where you can build, you know, capital efficient, very, very good companies that can have very good outcomes, just like the one you just described. So I take it that this is definitely part of your investment thesis, yes?
Yes, I'm a niche guy.
Good. I'm glad to hear that because, you know, I would say just in the last 6 months, I've probably talked to 80 investors who operate in this general ecosystem of pre-seed, seed, post-seed, pre-series A, and small series A funds. And a large number of them are still looking for unicorns. Now, there are about 600 or more you know, funds, micro VCs that are operating in this space. If everybody looks for unicorns, it is just mathematically not viable.
Correct. So I don't chase unicorns, by the way. If a unicorn comes to me, I say, go to the valley, talk to the big guys. I'm not for you. So I'm very clear about and very focused on who I want to invest in. So my thesis is I want to come in very early. I want to take the biggest risk. I want to mentor these entrepreneurs, and I'm looking for early exits, and I'm not ashamed about that. I like to get in early and get out early. So with that strategy, I can't talk about my fund right now in terms of what the fund could return, but as an angel investor that invested along with a group of other Thai angels, if we were a fund, in 4 years, we returned almost 3.5x of our original investment. Okay, and many of those investments like Sheer ID are still around. So our IRR would be a phenomenal IRR, like 40–45%. So we know that if you come in early, mentor the entrepreneurs, and you find companies that have those vertical, they're on those vertical niches where there's not a lot of competition, and you've got a great CEO, you can put together a great team that really executes and is capital efficient, you can build a $5–10 million business and sell it for, if it's in the SaaS space, you know, you can go to 5 to 10x, right? And you can get really great returns without the, what I call the, let's invest in 20 jumbo jets and 18 will crash and 2 will, you know, be the big, you know, Airbnb.
This is a venture model.
This is your traditional venture model. I don't believe in that model, to tell you the truth. Today, I call myself as a very small private equity player, where we're coming in, we not only provide capital, but we provide great mentors. We have great entrepreneurs that are investors in our fund or in the TAI ecosystem. And what we provide the entrepreneur is that feedback, the guidance that they really need to execute well. And that's like 80% of the problem, right? Mm-hmm. So if you can solve that at that very early stage, the chances of success are far higher, and the returns can go from 2x to 5x to 7x. So that's our model.
So one question on that, you said you like early exits. Does that mean that if the company is raising more money in, after your angel round, you actually sell out in those rounds?
If we have an opportunity, we will.
Yeah. Okay.
Or we might advise the company. They've been around 3-4 years. They've the biggest issue for any company once they hit the $2-3 million threshold is then they need substantial capital, no matter what the industry is, to scale. And depending on who the funder and the investor is, many times you see these growth equity firms coming in or large strategic investors coming in. They may want to own most of the company, right? They may want to take a larger portion of the company. And at that point, we're the small potatoes, right? We may not have follow-on capital to keep our pro rata ownership. And if the markups are great, we may just sell out. And it could be a 2xer or 2.5xer in a year to 18 months. It's a great return, great IRR. So we're open to that.
The reality is that getting from 0 to 1 million annual revenue run rate or 2 million annual revenue run rate is really hard. But once you get there, and if you can show repeatability, if you can show velocity, the amount of capital available to those kinds of companies, and if there is enough TAM in the project, there is a ton of capital chasing those kinds of deals.
In Silicon Valley, yes, not in Oregon.
But, Silicon Valley investors these days invest easily in Oregon. I mean, Oregon is very easy, actually. In fact, Pacific Northwest is very easy. Silicon Valley investors no longer just invest here.
I know that, but it's still harder when you're an Oregon-based company to go out and raise substantial amounts of capital from outside. Now, there are more and more companies that are coming in, more VC firms are looking at Oregon, but typically when I've talked to Silicon Valley investors, their response is, well, we like to invest in our backyard. So we like companies to be based here rather than...
I think some do. It really depends. If it's talking about very early stage stuff, they tend to like to invest in their backyard. But then when it comes to something a bit more mature and more proven, they have more flexibility.
And I don't want to discount the capital that is now available in Portland and Oregon now as well, because I think it used to be Series A used to be a real difficult process for Oregon companies to raise money because you had to go out of state. Now there's enough funds and enough sort of co-investment happening that a number of companies are able to get to Series A within Oregon. They don't need to go outside.
Who are your favorite Series A partners in the Oregon area that are local funds?
I've done 4 deals with Voyager Capital.
Yeah.
Diane Freeman. We've done a number of deals with Oregon Angel Fund, which is now kind of evolved from being sort of the early seed to Series A. So those funds are the 2 that we've done most what I call Series A deals with. We've done a fair number of deals with Portland Seed Fund. There's Rogue Ventures. There's 7 Peaks. I've done a couple of deals with Rogue Ventures. 7 Peaks is out of Bend, Oregon. There's Cascade Angels, and we all end up in at least 1 or 2 deals together.
Yeah, sure.
There's a lot of synergy between the local funds. There's a fund called W2 in Eugene, Oregon. There's a bunch of angel conferences, one called Bend Venture Conference, which is a fairly substantial angel conference. We've done a number of investments with the BVC angels where they create a fund and we co-invest.
And is the philosophy that you described of avoiding unicorns and then kind of like steering the unicorns in the direction of Silicon Valley and then focusing on the niches, is that philosophy shared by your peer group in Oregon?
I think I'm unique in that one.
You are unique in that one. That's interesting, huh? So
I'm very explicit.
Your peer group is just chasing unicorns.
I'm very, very explicit, and sometimes they'll shut me up and they say, "Don't talk about that," you know. So I'm actually religious about that strategy.
Okay, interesting to know that. And if you were to look at, I don't know if there's been any study or you have any maybe back of the envelope estimate, how many seed stage companies are in the pool, let's say in the 2017 vintage, how many companies are there in the seed pool?
Well, we made most of our investments in 2017 out of the fund. If I look at, when you say pool, are you talking about people who are looking for funding or people that have received funding?
Actually, both. I think if you have one number or the other number or both, I would be interested in both of those numbers.
So when we announced the Inclusive Fund in 2016, within 3 weeks, we had 1,000 people apply on our website. So that gives you an idea of the number of people, and most of them are from Oregon.
Yeah.
I don't have the statistics, but I would say we have made almost 20 investments out of the fund just in 2017. As a matter of fact, in 18 months, we have exhausted our first round investments from both funds. And that's just, Elevate. Oregon Angel Fund makes about 4 to 6 investments a year. I think Cascade Angel makes about the same. But there's some overlap. Portland Seed Fund does. Now they were raising their funds, so I don't think they made a lot of investments last year. They did a lot of follow-on. But I'd say, there's roughly in 2017, at least 30 to 40 companies got funded for seed funding, which is a pretty substantial number. That doesn't include any.
So about 1,000 companies looking, and 30 to 40 got funded. That's kind of what you're saying. That's good. That's good numbers. Yeah. Very good. Well, Nitin, it's been a pleasure getting to know you a bit. If you're down in the valley, let's have lunch and.
I would love to. Now that we have this face contact, I would love to do that. I am the new chair of Thai Global, so I'll be down there more often. And so I will let you off.
Park, right off Sand Hill Road. So let's get together.
Absolutely. Thank you.
Thank you for coming today.